check 1 2 sound check, just making sure my sound works because there's plenty of times that I do live streams and my sound doesn't work and it's totally wasted. Facebook on my phone has been pretty crappy. Like it won't allow me to look at my timeline, so I have to depend on basically my how do you call it? My notifications. Here you go. It sounds like it works. So we're gonna go ahead and get started. I really appreciate it. What's up, guys? This is Larry, the mortgage guy, your mortgage insider, and I'm a certified veteran mortgage advisor, as you can see, right? And today I'm very excited to present to you a class that I've taught in the past, but I think it's more relevant today than it was when I first taught it. And that is how to get the best interest rate or how to guarantee the best interest rate in this crazy market. Basically, how to get the best rate right now, right? So, there are lots of things happening in our market. I'm not even going to try to figure out what it is. I'm not even going to try to interpret or give my opinion. I just know that the rates are higher than normal. And of course, people say you shouldn't talk about the rates being high. And let's just let's just be real here, guys. I'm not going to be the idiot that's going to be like, hey, the rates are still good. They're not as good as they were a week ago, a month ago, 6 months ago, right? And that's just obvious. So I don't think it's wrong for me to share with you that the rates are not as friendly as they were. So what does that mean? Well, less people are going to qualify. Uh, it's going to cost more per month to own a house. Refinances are pretty much non-existent, right? There's lots of things that are happening because of the rates going up. Now, are the rates going to go back down? Who knows? Right? Who knows? I'm not even going to answer that. But I do have an answer to what to do in this situation, whether the rates are going up or down, right? Basically, the class is how to guarantee the best interest rate in this crazy market. Crazy as in up and down, or just up and down. It still applies. Okay. So let me go ahead and start my presentation here. As you can see, this is what you call a locked loan estimate. It's an example. This is from the CFPB website, Consumer Financial Protection Bureau website. So it is not my loan estimate. It's not one that I produce. It's one that the CFPB produced as an example. So it's compliant that I'm showing you this. If you look at the information, it's not real people. Michael Jones and Mary Stone, 123 Anywhere Street. So this is not a real loan estimate. It's just an example. Okay. But it's good enough to explain to you how to take this strategy to your clients, or if you're actually the one buying the house. Now, the thing about the locked loan estimate or the loan estimate in general, it's a standard form that all lenders, I guess I say, all lenders use this form. What I mean by that is whether you're going to me or the lender next door, the lender in California or lender in New York, they're all going to use pretty much the same form. It's a standard form created by whoever, the CFPB, whatever, so that people buying houses can compare apples to apples. It's easy for me to see the difference between this loan estimate and this loan estimate, because in the past, loan estimates were created by whoever, however, and they all look different. And it's really hard to know where you're actually, how do I put this? How you're actually saving or losing money, right? It was really hard to compare, right? But in this case, they're exactly the same. And you can be like, okay, this is how much the closing costs are. This is how much the rate is. It's really easy. You can compare right away, right? So again, go to the CFPB, Consumer Financial Protection Bureau website. I think it's like consumerfinance.gov. You can look at a loan estimate and you'll find the exact example that I'm using. Okay. So again, it's a standard form we all use, so it's easy to compare. So I'm using a form that you're going to see if you're buying a house using a normal loan, Fannie Freddie, right? Loan estimate, right? This is what you're looking for. This is going to be like your loan amount, your rate, monthly payment, yada, yada, yada. This is where you need to look at the rate lock. Okay. If the rate is locked, it's going to say yes, and it's going to tell you when it expires. If the rate's not locked, it's going to say no right here. Okay. If someone gives you a loan estimate and they say this is a quote, whatever, and you look at it and it's not locked, you might as well treat it like an advertisement. It's not real until it's locked. Okay. That number can change, at least in this market, daily, sometimes 4 or 5 times a day, right? Well, maybe that might be an exaggeration, but still enough for you not to be able to hold on to a sheet paper and for it to actually mean something the next day, right? So it needs to be locked. It needs to have a yes right here. Okay. Yes means locked. If it's not locked, again, it might as well be an advertisement. I mean, people would say it's not worth the paper it's printed on, or it's toilet paper, whatever you want to call it, right? It's basically not real if it's not locked, right? I can tell you anything. I can quote you anything if it's not locked. I can put 4 here. I can put 2 here. I can put 1 here. It doesn't matter if it's not locked, right? Now, of course, that's not true, but basically, the point is this number is not real until it's locked. Okay. Hopefully, I nailed that into your head. Okay. So it has to say yes right here. Okay. If this says yes, then this rate is not going to change until this date, right? Whatever this date is, right? Usually 15 days, 30 days, 45 days, depending, right? But it's going to be a certain amount of time, right? So basically, a lock loan estimate is saying you are locked at this rate until this date. And then if this date is to come up, it will expire, and you either have to let it go and relock like 30 days later, or you have to pay to extend the lock. Okay. But basically, it's locked, meaning it's not going to change no matter what for the next 7 days, 15 days, 30 days, whatever. Why is this important? It's important because what you're doing is you're trying to protect yourself from the fluctuations of the market. You're trying to protect yourself from it going out of control and going up or whatever, right? Now, of course, if it goes down, that's another consideration. What would I want? Do I want to lock if the rates are going to go down? So it makes people kind of like, I want to gamble a little bit. I want to wait. I want to float, is what we call it, right? The rates are kind of high. Maybe they'll get better next week, whatever. So they float, right? They don't want to lock, right? And this strategy will help you with that situation as well. So this strategy is designed to help you with locking it so that the rates don't go up too crazy, and making it so that you have the ability to lock at a lower rate if the rates were to go down, even if you lock your rate. Okay. All right. So let's go to the next page. This right here, I'm not even going to break this down as much, but this is important right here when it comes to your locked rate. Look at the loan costs. Okay. All this stuff is going to be different depending on the area you're at, how much your house is worth, or what the purchase price is, yada, yada, yada. I'm not going to break this down. This is not, to me, this is not what this class is about. This class is about right here, the origination charges. Okay. Because I want you to focus on this top line right here, percentage of loan amount or points or discount points. This right here is what you're paying for that rate. Okay. Discount points, whatever. So like if you get quoted a 7.5 with a 1.5% in discount, basically you're getting charged 1.5%. You're getting charged 1.5% to buy that rate. Okay. A par rate is a rate that has no discount point. It's zero. It's free, so to speak, right? We're not seeing very many par rates nowadays, right? Maybe a year ago, you actually had par rates, and you could actually get a credit if you were willing to take a higher interest rate. So let's say it was in the threes, you can get a 3.5 and get a lender credit towards your closing costs, whatever, right? So some people might actually take a higher rate so that they can get help with closing costs, whatever, right? So the discount points can sometimes be positive or negative, right? But in this case, it's a negative, meaning like you're getting charged, right, 0.25%, right, in order to buy this rate. Okay, that's important because you might be shown a really low rate. A lot of big box, ginormous, mass, whatever size mortgage companies like to do this. They like to quote a really, really low rate or lower than normal, and not let you know that there's actually a cost for it. You're actually buying it down, right? And most people who are good morning, April. Thanks for joining. Most people who are doing some research, doing a little bit of reading, a little bit of googling, they know about buying down rates. They know about discount prices, whatever. But I know it sounds crazy, but there's been people who are like, Larry, I got a 3% interest rate, and it's the rates in the fives. I got 3% interest rate. Can you beat that? I'm like, not without buying it down. I was like, oh well, I got 3%. I was like, well, let me see your lock loan estimate, and they send it, and it's 3% with a crap ton of discount points. So they're actually paying for the rate, and they didn't realize that because the lender failed to explain that to them, right? So again, it's very important that you check out the part where it says loan costs. Okay. Now, how do you really, really know where everything's going to cost you? It's going to be on page 3. Okay. Actually, I don't know why I didn't show that. Oh, you know what? It's because it's my second part of the conversation. And I actually what kind of went over what I want to say in these next slides, right? So, and page 1, page 2, right? This is what I was emphasizing. It needs to say it's locked yes with the date. Okay. I kind of gave the presentation without showing the slides, basically, because I've done this so many times. I know this by heart, right? Again, focus on the discount points, right? So that's how you, and really the reason why I'm showing this because the question people ask me is what is the interest rate? Which to me is a silly question. I know it sounds kind of mean that I'm saying that, but when someone asks you what's the interest rate, if you're not ready to lock right now with the contract in hand, whatever I tell you today is going to be different tomorrow, right? And that kind of allows for loan officers to sort of lie, right? They can be like, we're in the threes when they know they're like in the fives. We're in the threes because you're asking over the phone. I'm just going to tell you whatever I want to tell you, right? Because you can't hold me to it. You're not asking me to lock it. The only time you can actually hold someone to a number is if you say, "Can I lock that rate?" Then they can't lie to you, right? We're in the threes. Okay, lock the threes. Oh, actually, it's in the fives. Wait a minute, you just told me it's the threes. See, you catch them on the lie. But if you can't lock it, they can tell you whatever they want. And then if you try to lock it the next day and they say, "Oh, it's in the fives now," I'm like, wait a minute, you told me it's the threes. Oh, well, the rates have changed, right? And that's a legitimate response, right? So again, I think it's a silly question when someone asks what's the interest rate, and I'll tell you why. Again, it's possible you can possibly quote it with a few details. We call it quick pricing, right? So you give me your credit score, you tell me how much your purchase price is, how much you're putting down, what your zip code is. Maybe you can tell me, other things that might help, and I give you a possible a guesstimation of where you might be, right? But again, the most likely scenario is going to be inaccurate. Sometimes purposely quoted lower with fine print. Like I said, the lender might be giving you a lower number, even though they know it's not that low. They have a fine print there, right? Maybe they're talking about discount points, whatever. Rates change daily, sometimes multiple times a day. And they're doing it for marketing. They want to market you the best rates. I mean, when you Google rates, of course you're going to see the best rates online because they're marketing to you, they're advertising to you, right? I compare it to a moving train because it's never the same. And like I said, they're not liable for misquotes because they can be in the market, right? So how do you get an accurate quote? You apply for a full documentation application. You get under contract with the property, and then you get a lock loan estimate, which is what I'm talking about today. Okay. All right. So the next question is, and this is the question I plan to answer today, is how do I get the best interest rate? All right. This is a strategy that's going to take a little bit of work. It can actually delay you a little bit, right? But it might be worth it. And yes, unfortunately, you're gonna have to have your credit looked at least twice, but you don't have to worry about the increase as long as you do it within 45 days because the CFPB or the Consumer Financial Protection Bureau they designed it so that you can have your credit looked at multiple times by lenders within 45 days with it counting as the same inquiry. They did that because they know you're not trying to buy 10 houses. They know that you're just trying to look for the best rate or the best lender or whatever, right? Now, if you apply for 10 credit cards, well, you might actually trying to get 10 credit cards, and that's why they will count against you every single time you inquire for a credit card. They don't want you to abuse that, right? But they know that you're going to buy 10 houses for the most part, right? So again, it does take work. You got to choose your favorite lender. Actually, choose a second favorite lender. You got to apply, get pre-approved, get under contract, request a rate quote, and have them lock it. Hey, Mr. Lender guy, here's my contract. Can I get a loan estimate? Then I'll send you disclosure. You can see a loan estimate. Hey, actually, I want you to lock it. What's the rate? Oh, the rate is at 4. Okay, can you go and lock it right now? Okay, great. Boom, lock it. They're going to send you disclosures again. If you didn't lock it before, they sent the initial disclosures, but they're sending you disclosures again with a locked loan estimate, the little sheet of paper that shows you with the yes, right? And you're going to not sign it, right? I mean, you can if you want, but I would delay because I would bring it to your favorite lender, right? And then do the same thing. You ask the favorite lender, hey, I'm actually shopping you. I have another lender I'm working with, but I want to see what you can do. Here, let me apply. Here's my contract. Okay, can you please send me disclosures? And now you have, you have their rate, right? But or you can start in the beginning and say, listen, I have this lock loan estimate from this lender. This lender is not my favorite lender. He's lender B. I'd rather work with lender A, which is you. Okay, so if you lender A can beat this, I will go with you, right? So basically, you're bringing a comparison for them to work with. Okay, and you ask them to beat it. If they can beat it, then it should be a no-brainer. You lock the rate, and you pretty much got the best rate, right? Um, Now, if they can't beat it, but they can match it, then you could decide. Do I really want to just go with lender A because he is my favorite, or do I want to let him float, right? But basically, if you want to float, it makes it for you to have other options, which I'm going to explain to you next. Okay. But I want you to know that once the rate is locked, you cannot change it. Again, the whole point of locking a rate is to secure it, right? Whether rates go up or go down, you're static. You're not moving anywhere for the next 30 days, right? You do that to protect yourself, but also if the rates were to go down, you can't do anything about it. And of course, you think to yourself, well, why not? It's like, well, if all lenders did that, then they would lose money. They would not be in business, right? So that's not how it works. Okay, it's not like price matching with like Old Navy or whatever. You lock the rate, you're committing to that rate. Okay, so you can't relock it or whatever. You can only let it expire, but then you have to wait 30 days before you can relock it, which probably won't fly with most contracts, right? So you're stuck with it. But this strategy helps you set it up so that you can relock at a new rate. And I'm going to show you what I mean by that. Okay. Again, it's okay to tell your second favorite lender you're shopping. Actually, you can tell every lender that you're shopping. Okay. All right. So, how to get the best interest rates. And this is what all loan officers will probably tell you, right? You get your credit scores as high as possible, obviously, have low balances on any debts. You can have a credit plan or credit repair. I'm not too familiar with the credit repair stuff, but I do provide credit plans with all my clients, even ones that have good credit, because I want to get them the best interest rates. So I want to give them the best credit score. So I'll tell them how to get the credit scores up so they can get the best interest rates. But there's also other questionable methods, which I'm not going to mention today, but there are ways to get your credit scores up that might not be something I would suggest, right? All right. So how to get the best interest rate, and not all loan officers, not all of them are going to tell you this. And this is what I kind of told you, right? You get two competing loan officers, your favorite and your second favorite. You focus on the APR, not the rate. Okay. And I'm going to show you like a example, right? Get a lock rate from the second favorite lender and compare it to the first or your favorite lender, and then the decision is made easy. Worst case, let the rate lock expire and wait 30 days, like I said. Okay. Again, focus on APR. This is page 3, and this is what I was kind of talking about in the beginning. Page 1 is important because it shows that it's locked and it tells you the rate and breaks things down very, very simply. Page 2 is important because it tells you what discount points you're paying, right, on the top left, if you remember. But page 3 to me is the most important because it tells you your APR, right, annual percentage rate or whatever. And this is actually the measure of how much your loan is costing you. So I've actually had, I'll give you a quick story time. Okay. I've actually had people send me a lock loan estimate stating, hey, can you beat this rate? Blah, 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 blah. And their rate was lower than mine, right? Like, let's say mine was a 4 and there was like a 3.875, right? He said, can you beat this rate? And I looked at it. I was like, I am beating it. They're like, what do you mean? I'm like, well, look at page 3. My APR is lower than their APR. And they're like, why does that even matter? I'm like, APR is the total cost of the loan. So your rate might be better with them, but you're paying a lot of money for that rate, right? So I can do the same for you. And actually, I showed them the numbers like, listen, I can give you 3.75, and this is how much it's going to cost you versus how much they're charging you. And therefore, my APR is still lower, right? So they were tricked. They thought they had a better rate with the other lender when they compared to mine, when in actuality, the other lender was charging them more, right? And they would have known that, the clients would have known that if they looked at the APR. And I had to break down to them why is APR the most important thing. And I actually have I wrote an email about it, right? This is the email that I read to them. It's like, you got to focus on certain things. You got to focus on the origination charges. That's one thing that you can look at. Page 2, right? They have a lot higher origination charges than me, right? And then, of course, you have to look at the loan estimate. If you see that it's not locked, that doesn't mean anything, right? So you got to make sure it's locked, right? So bottom line is you have to actually make sure that the clients uh, know where to look, right? So again, APR, right, on page 3, right? You got to focus on APR, okay? And then again, the email that I was mentioning is that because the person they sent me the lock loan estimate, and it was still more expensive with the APR, even though the rates was lower. I had to break down how to find this information. Look at the loan cost, look at the originating charge, look at the discount points, okay? And then if you get a loan estimate with a low rate, but it's not locked, then that doesn't mean anything. Again, it's advertisement. You have to make sure it says yes, and it tells you when, right? And I actually found an article from investopia.com, right? An authority on financing, right? And it defines to you why APR is more important, right? APR, however, is more effective rate to consider when comparing loans. It says the first line, the APR, however, is more effective rate to consider when comparing loans. And then I put right here, more screenshots because that's from directly from the website. The scenario most confusing to borrowers is when two lenders are offering the same nominal rate in monthly payment but different APRs. In a case like this, the lender with the lower APR is requiring fewer upfront fees and offering a better deal. A lot of people don't know this. A lot of people don't think about this. Again, if they did, the people calling me would be like, "What's your APR? What's your APR?" No, what's your interest rate? It's the question I always get. Everyone asks this question. Real estate agents, clients, people wanting to refinance, friends and family. What are the rates today? It's not about rate. It's about APR. But again, no one asked that because no one's thinking about it. They're looking at the wrong thing. It's a distraction. Okay. The bottom line, while the interest rate determines the cost of borrowing money, the APR is a more accurate picture of total borrowing costs because it takes into consideration other costs associated with procuring a loan, particularly a mortgage. When determining which loan provider to borrow money from, it's crucial to pay attention to the APR, meaning the real cost of financing. Again, this should not be blowing your mind, but I'm pretty sure most people don't know this. APR, not interest rate. Okay. So, I give links to whatever, to the information. Again, the strategy that I'm going to give you is how to get the best interest rate, right? And not just get better credit scores or pay stuff down. It's not just get two quotes or whatever. No, I'm gonna show you exactly how to get the best interest rate, no matter what's going on in the market, whether rates are going up, rates are going down, rates are fluctuating, whatever. Okay, so this is the strategy that I'm going to present to you. Okay, and this is something only I'm telling you because I mean, I've actually had other loan officers call me after seeing this class, and they're like, "What are you doing? Why would you tell people this? Why are you sending this?" And not that they feel I'm sharing something that's secret, but it's like it sounds like you're really hurting yourself. You're actually hurting your business by doing this. I'm like, No, that's not true. Yeah. Am I telling my clients to shop? Absolutely. You should shop. You should make sure that I'm the best lender across the board. Now, I've actually had clients who found lenders who are better in terms of cost and APR, and they still went with me. Why? I don't know. Maybe because I'm better looking, because I'm more charming. I don't know why. Maybe they like me better. Maybe they trust me. I don't know. Right. But I asked them to compare because I want them to feel good about working with me. I cannot sleep if I feel like I'm giving someone a bad deal, right? It's called the class or the lesson that my branch manager way back in the days taught me was never take a bad deal because you'll regret it, right? It'll come back at you, whatever. And I didn't know what that meant, but now I know. It means don't screw people over, right? Don't overcharge people, right? I've given up deals plenty of times where I found someone that was better than me, and I refer them to that person so that they can get a better deal because I sleep better at night when that happens. Okay. Now, if you want to use me, even though I'm more expensive, that's your choice, right? And I'm totally grateful and honored to it, but I'm still going to present you the best situation possible. I am teaching you how to shop. I'm teaching you how to price because I want you to trust me and I want to give you the best situation possible, even if it means possibly losing your business. Okay. So again, this thing I teach, most loan officers won't teach it. In fact, again, other loan officers that called me out on it, it's like, why would you tell people this? That doesn't make sense. It doesn't make sense that you would do this. Okay. So again, before I start, it requires extra work and time. Okay. Again, it's going to cost delays and extensions, possibly. You must be willing to deal with two LOs, and I recommend not dealing with a shitty LO, right? Meaning someone who's lazy or doesn't want to work with you, okay, or doesn't want to put out effort. So what you do is you have a locked rate with any LO. Second favorite, first favorite, doesn't matter. Okay. But you have a locked rate and you keep another loan officer ready to work for you. So you have your contract with this loan officer, you have a contract with this loan officer. This loan officer is the one you're working with, this loan officer that you locked your rate with. Okay. And if rates were to go up, then you're good. You protect yourself. But if rates were to go down, well, you can't change anything with this guy because he's locked. Wait a minute, you got your other lender here who's ready to lock for you. Okay. So what I mean by that is float. Okay. And do this intentionally. Like get the lock rate with one loan officer and tell the other loan officer, hey, I know I don't have my contract with you yet, or I don't have my contract with you. But if the rates are to go down, I want your help. If you can lock it for me a low rate, I'll jump over to you right away. Right. It gives that loan officer a chance. It gives that loan officer basically kind of a backup position if things were to go awry or rates will go too crazy on this side, or maybe not rates go crazy, but just things don't work out because the rates locked, of course. But if things don't work out, you have a backup. But now, if the market is like we're in the sevens, wait a minute, we're back in the fives. Well, you're stuck with the sevens over here, but hey, you got loan officer over here to lock the five for you. Okay, so again, when you lock the rate, you're safe. But if you're floating, you have the option to lower. So you're guaranteed no matter what the market does, good rate or bad rate. Okay. And I'm telling you, there's people out there who probably locked a rate with a loan officer, rates went down, and they're like, oh well, it is what it is. Why? Why would you lock a rate with a loan officer or lender, whatever, at a rate that's not great, but it's the best rate at that time? And then when the rates were to go down, you don't do anything. You just, well, I'm already halfway through with this guy. I'm already appraisals are already ordered, or yeah, well, we just don't want to. We don't want to. We don't want to make these people work and not help them or not be with them. It's silly. Okay, we're all loan officers. We all know the game. We all know how it works. No one can blame you for going with the best lender and the best rate. No one can blame you for that. So if you're locked at a 7% interest rate or 6% interest rate with this lender, and this lender can give you a 5, no one can blame you for shifting over, no matter what the reason is, whether the rates got better or there's somehow get a better pricing. There's no one can blame you from going from a locked interest rate at a 6, even if you're halfway done with this guy, and go over here, especially if they can still close at the same time. Right? Especially if they can still honor the contract date and everything like that, right? And if you don't have that lender, talk to me because I am that lender. Okay, we can close loans in 7 days if we need to, right? I mean, I can show you documented proof. Okay, but if you're worth the lender here and your rate's higher and the rates are lower over here, right? It makes sense for you to move over, right? Unless it's like the day before closing, then maybe it doesn't make any sense. But if you have like a week, 2 weeks, for sure 2 weeks, then it makes sense to shift over. No one's going to blame you for that. Okay. So I recommend having two lenders work for you at the same time. I recommend that every single time. I tell clients, hey, it's okay to shop. Okay. I want you to get the best situation possible. All right, cool. So I think I'm done. Any questions? Did that in about 30 minutes. All right, great. I really appreciate you guys being a part of this call. If you have any questions, you can always call, text me, email, whatever you like. My name is Larry Lee, 832-606-2193, Larry Lee at openmortgage.com, LarryLeeLender.com. You can link tree me at Larry Lee, Larryle, or you can Google me, Larry the Mortgage Guy, if you forget everything, and you'll probably find me. I kind of make that intentional, right? But I really appreciate you guys being a part of this call. If you have any questions, give me a call, text me, email me, whatever you like. This is Larry, the Mortgage Guy, your mortgage insider, and certified veteran mortgage advisor. I'm out. Thanks, guys.